Hey there, hope all is well. Back at you today with some more RTD news updates. And as always, if you find today's articles informative, please share them with our family and friends to help them become more monetarily aware on what's going on surrounding their money. And if you're new to RTD, click the subscribe button for more RTD news interviews as well as updates. Let's get into today's articles. Well, today's articles covers a variety of topics dealing with, global issues such as the one here with China, all the way to here domestically in the United States with what's going on with our markets, as well as the precious metal sector. So the first article here is from Fortune. IMF just warned of a potential banking crisis in China. Second one's from Zero Hedge. Saudi's China dumped treasuries. Foreign central banks liquidated a record 346 billion in U.S. paper. Not a good thing. Next one, big topic of discussion is, will Italy leave the euro? And it says just follow the money. And then back here at home, it says exclusive, homelessness among New York City school kids surges as population tops 100,000. Next one, 65% of Americans limit their monthly spending, predominantly the millennials. Next one from Zero Hedge, housing starts crash most in 5 years to 18-month lows. And then I'm sure you heard about it already. If you haven't, Deutsche Bank to pay 38 million in U.S. silver price fixing. So they're basically admitting that they rigged the game. And then the last one here is from SRS Rocco. Silver Eagle demand returns with a vengeance as political and economic turmoil increases. So let's dive into the articles. So here's the first article here from Fortune, originally reported by Reuters. The IMF just warned of a potential banking crisis in China. So in the gist of it, there's potential explosion of bad loans that will come due, of which it will create a problem for the banking sector there. And so they're trying to figure out things, being that there's just more debt that's still being issued than there's ever able to be repaid. So just give you an idea of what's going on here. It says China's credit growth has been very fast by global standards, and without a comprehensive strategy to tackle the debt overhang, there's growing risk it will have a banking crisis or sharply slower growth, or both, the International Monetary Fund said. In a working paper, the IMF said Beijing should act quickly before the problem becomes systemic, and that the problems of both creditors and debtors needed to be addressed simultaneously. The paper is one of the multiple warnings that the IMF has made about Chinese economy this year. The fund has projected that the world's second largest economy would grow 6.6% in 2016, but said expansion would gradually slow to around 5.8% in 2021. Of course, those are all guesstimates, which tend to never really be true. Corporate China is sitting on 18 trillion in debt, equivalent to about 169% of the country's gross domestic product. Ratings agency S&P Global has estimated China's banks will need as much as 1.7 trillion in capital to cover a likely surge in bad loans. It is said in its paper dated October 14th, the IMF said just cleaning up the banks by moving bad loans off bank balance sheets and recapitalizing banks, or allowing companies to go bankrupt without recapitalizing banks, would not revitalize economic activity. And then it goes on just to finish up here. It said that so far, authorities have failed to implement a full-fledged strategy, as China's approach involved mainly handling the overcapacity problem with less discussion of financial implications. On Tuesday, China's central bank said Chinese banks extended 1.22 trillion yuan, or 181.3 billion in new loans in September, a 3-month high, well above expectations, while money supply growth edged up. So they're still issuing debt and still printing currency, which unfortunately will not fare likely in the end. If you're interested, more news below. Here's a primary example of rethinking the dollar, or rethinking the treasuries, as it looks like, according to this article here. Saudi's China dumped treasuries. Foreign central banks liquidated a record 346 billion in U.S. paper. So it seems like, for whatever reason, I'm sure it's not a surprise to the powers that be, but yet nations, especially Eastern nations, are beginning to, get rid of this paper just because it's not going to be worth much anytime soon. And so it says 1 month ago, when we last looked at the Fed's update of treasuries held in custody, we noticed something troubling. The numbers dropped sharply, declining by 27.5 billion in 1 week, the biggest weekly drop since January 2015, pushing the total amount of custodial paper to 22.83 trillion, the lowest since 2012. 1 month later, we refresh the chart and find that in latest weekly update, foreign central banks continue their relentless liquidation of U.S. paper held in Fed's custody account, which tumbled by another 22.3 billion in the past week. pushing the total amount of custodial paper to 2.805 trillion, another fresh post 2012 low. So here's a good graph kind of depicting where we're at now. So they're basically saying that it's here and it ain't been there since October-ish of 2012. So it's a lot of liquidating of this paper, as they put it. Then today, in addition to the Fed's custodial data, we also got the latest monthly Treasury international data, which show that troubling trend presented last one month ago as accelerated. Recall that a month ago we reported that in 12 months we have observed a not so stealthy, in fact quite massive 343 billion in treasury selling by foreign central banks in the period between July 2015 and July 2016, something truly unprecedented in size and scope. So here just shows a major drop off of everything kind of going even keel up until more so the beginning of this year, where countries began saying, we've had enough. We're struggling. Let's get rid of some of this paper and buy other things or support our own national currencies. And so the lack of need for treasuries or dollars is becoming apparent. So it's becoming quite alarming. So goes on to give some more graphs as to how the actual breakdown of China, how it's breaking down and why. Saudis, how it's breaking down. So if you're interested, articles below for more details. Here's an article from Bloomberg. It's will Italy leave the euro? It's just follow the money. And it has to do with the idea of a lot of money or capital flight, as they put it, leaving a lot of money, the euros leaving Italy, pending all this banking crisis that's underway and a possibility of a Italian exit from the European Union. So they're kind of looking at numbers and seeing how over the last couple months there's been more debits and credits amongst banks, whereas an Italian bank is leaving it, and in Germany it's crediting the account there. So here's an article, just sum it up for you. It says, will Italy follow the UK example and leave the European Union? Far-fetched as it may seem, capital flows suggest that some people are waiting to find out. To keep the euro area accounts in balance, Europe's central banks track flow of money amongst the members of the currency union. If, for example, a depositor moves 100 euros from Italy to Germany, the Bank of Italy records a liability to the euro system, and the Bundesbank records a credit. If a central bank starts building up liabilities rapidly, that tends to be a sign of capital flight. Lately, Italy's central bank has been building up a lot of liabilities to the euro system. As the end of September, that stood at about 354 billion euros, up 118 billion from a year earlier, and up 78 billion since the end of May, before the UK voted to leave the EU. The outflow isn't quite as large as during the sovereign debt crisis of 2012, but it's still significant. Then it gives a little chart here showing follow the money from last 6 months change in central bank balance with the euro system. So it basically shows that as money was exiting Italy, it was being credited in Germany. And it kind of, leaving here and it was flowing other places. But then now it seems to match the trend of money's leaving Italy and then it's kind of balancing out in Germany. So they're kind of guesstimating at the fact that Italy could be pretty soon looking to leave the euro, or announce that they're looking to leave the euro system, and then that would kind of explain some of this debit and credit. So just to finish up, it says why they're accelerating out from Italy. One explanation is that people are worried about the state of the country's banks, which are suffering the consequences of bad lending, poor governance, and a new euro area oversight system that makes rescues difficult. Another is political. Italian Prime Minister has stacked his fate on a December government reform referendum that, if it goes against him, would strengthen opponents who want to force a vote on whether Italy should remain in the common currency, a key element of the broader Euro Union. In that context, it's not surprising that some depositors prefer not to hold Italian euros, given the chance that they might eventually be converted into lira. So this is interesting here. They're talking about the chance of going away from the euro and possibly issuing their own, going back to the old lira if things really, really get bad, which they seem to be. So interesting article. If you're interested in reading more, you can find it below. So here we are back home in America, and this is from the Daily News out of New York, and it's exclusive. Homelessness among New York City school kids surges as population tops 100,000. So it starts off with nearly 1 in 10 city school kids was homeless during the school year that ended in June, representing a whopping 22% jump in homelessness over the year before, the Daily News has learned. A staggering 105,444 homeless students attended city schools in 2015-16 year, up from 86,000 in the 2014-15 school year, according to data posted online Monday by the New York State Technical and Educational Assistance Center for Homeless Students, a project of nonprofit advocates for children of New York. That number includes charter schools and is more than double the city's pre-recession homeless student population of 50,000 for the 2007-2008 school year. Roughly 1.1 million students are enrolled in city schools. NYS teachers analyst Emily Kramer said that the explosion in the number of homeless city students reported to the state could be due to better accounting as well as economic reality. There has been a steady increase over the past number of years and a sharp increase in the most recent data, Kramer said. Despite the recovery from the Great Recession, right, low-income families continue to struggle to find permanent housing. And so, you know, at the end of the day, the cost of living in New York is through the roof. And so there's no doubt that the so-called recovery is not really apparent in New York with families there, to the point where, you know, better data has shown that more kids are without homes or without their daily needs more likely, but still able to go to school. So I definitely commend that they're still able to get their education despite their economic conditions. So it's unfortunate that this is happening in New York, but I'm sure it's happening in other cities as well, just not reported as of yet. So interesting article if you want to find out more about it. Article from CNBC. It says 65% of Americans limit their monthly spending. Millennials burdened by student debt say they need to save more. And so basically gives a good graph here, kind of breaking down how it's those that survey the millennials were allocated their funds. Top reasons to rein it in. It says the need to save more, 30%, stagnant income, 25%, worries about the economy, 15%, having too much debt, 10%. And so it's interesting. It says, in this climate, who knows what lies ahead? So many Americans are choosing to play it safe. To that end, nearly 2 in 3 Americans are limiting their monthly spending, according to a new report by Bankrate.com. The majority of those polled cited the need to save more money as a reason behind a more cautious approach to spending, while 1/4 blamed stagnant income, followed by worries about the economy and having too much debt. So if millennials are saving, they're not spending. That's not good for retail. So that's why all this is just one big domino waiting to fall, because if people aren't spending, businesses aren't making money, employees aren't getting paid, and then from there on out. So definitely not good. But this is reality according to these statistics here. So we'll see what it looks like further into the year if it gets worse, or especially next year when we are officially, in my opinion, announced that we're in a recession. How will these numbers really play out? So interesting article if you're interested. It's below. Here's another article here from Zero Hedge. It says housing starts crash most in 5 years to 18-month lows. And so it says, following August disappointment dump in housing starts and permits, September data is an utter disaster. Against expectations of a 2.9% rise, housing starts plunged to 9.09% in September to a 1.04, the weakest since March 2015. Year-over-year starts have crashed about 12%, the most since April 2011, driven by a collapse in multifamily housing. Permits offered some hope in the future, although current starts suggest historical permits were a weak indicator. For the first time since June 2014, housing starts fell for 2 months in a row, crashing 12% year over year. So here's a little chart here showing the uptrend of just how easy money makes it affordable for people to basically go get housing with zero down or no money whatsoever. And then here, obvious trend of just, you know, it dropping off is quite alarming, being that we haven't had that in quite a while. So it's interesting. It says single family starts rose 8.1% of the month and 5.4% on the year, as multifamily collapsed 38% month on month and 40.8% year over year. So just another chart of how, you know, things go up, but yet they come down. So interesting article here. More graphs of just upward trend, and then it's a stop, and then it's going to be a drop. So when it comes to graphs and charts and data and of how the economy is measured, there will be more graphs with more dips and drops coming to you soon, I'm sure. So interesting article. If you're interested, it's below. Well, out of Reuters, this is another shocking yet not surprising announcement here. It says Deutsche Bank to pay $38 million in U.S. silver price fixing case. And so you think of 38 million. What is 38 millions when, you know, this is a billion/trillion dollar industry here? And so they're, deciding to pay a fine amongst all their other problems they're facing. So 38 million is just, it's literally 38 cents to them in comparison to the trillions and millions of billions that they're due and owed and that they deal with. So just to give you an idea what's going on here, this is in my opinion a very important story. Deutsche Bank has agreed to pay 38 million to settle U.S. litigation over allegations that illegally conspired with other banks to fix silver prices at the expense of investors, according to court papers filed on Monday. So they settled for 38 million on allegations that they, along with other banks, fixed the silver price. So that alone, who's going to be held accountable for this? What CEO, what executive is going to go to jail for this? No one. But that's just how this system operates. The settlement is disclosed in papers filed in Manhattan federal court came in one many recent lawsuits in which investors have accused banks of conspiring to rig rates and prices in financial and commodity markets. The settlement had been expected since April, though terms have yet to be disclosed. In court papers, lawyers for the investors say the deal will likely be an icebreaker that will serve as a catalyst for open banks to settle. Vincent Brigetti, a lawyer for the investors, said the deal provides substantial monetary compensation plus cooperation from Deutsche Bank in the continued prosecution of this important case against a non-settling defendant. So interesting. And then it goes on to list a couple other. In litigation, investors claim Deutsche Bank, HSBC Holding, Bank of Nova Scotia, rigged silver prices through a secret daily meeting called the Silver Fix and accused UBS of exploiting that fix. The allegations conspiracy started back in 1999, suppressed prices on roughly 30 billion of silver and silver financial instruments traded each year, and enabled the banks to pocket returns that could top 100% annualized, said the investors. So interesting. This is quite alarming that all these banks are included in this whole rig of the market, but yet there'll be no real true justice brought to the forefront as far as jail time and names being called out and people being held accountable as opposed to just settling with these little minuscule fines. So interesting article. If you're interested, it's below. Well, it's interesting that, with all the Deutsche Bank admitting to rigging the game and all the other banks that are involved in the silver price fix, this article here from SRS Rocco, Silver Eagle demand returns with a vengeance as political and economic turmoil increases. So here's just a chart that just caught my eye of just showing how the demand in Silver Eagles alone is, really ramping up. And so with admitting that silver price fixes, it just goes to show how undervalued silver is. And those that are aware are clearly taking advantage of it. So just to give you an idea of what he's talking about here. U.S. Mint Silver Eagle sales surged in the first half of October due to increased turmoil in the political system and economic markets. Silver Eagle sales were strong in the first 5 months of the year, but weakened in the summer due to several factors. One factor was the fall off in demand by the authorized dealers who had continued to purchase record Silver Eagles in the first part of 2016, even though retail investor demand had softened. The other factor was a weakening of investor demand as a contagion from the UK exit of the EU subsided in the summer. Regardless, U.S. Mint Silver Eagle sales came back with a vengeance in the first half of October, reaching 2.5 million, according to their most recent updated date as of yesterday. We look at this chart below, we can see how much demand has increased compared to the previous 3 months. Silver Eagle sales as of October 18th are 75% higher than total sales for the September of 1.6 million. Furthermore, they have already surpassed June sales of 2.8 million. If Silver Eagle sales continue to remain strong for the remainder of the month, I estimate that at least 4 million will be sold. So with all this rigging, people are becoming aware of what's going on, and there will be a rapid increase in silver demand as we head in towards the end of the year. So this is what's happening in the news. Hope you guys enjoy these articles here. Like always, if you find it informative, please share it. Try and get the word out there to help more people become aware of all these topics we discussed today. Looking forward to bringing you more RTD updates. See you next time.